Welcome back, all my fellow traders. In today's lesson, we're going to go over moving averages. I'm going to teach you exactly what moving averages are, how you can use them to identify trends on multiple time frames, how they work as dynamic support and resistance, and then I'm going to talk you through a setup you can use on your charts starting today to start making profits from technical analysis. Before I go any further though, so many of you watch these videos and not enough of you hit like or subscribe. So if you want to stay in tune with all the education I put out, please drop a subscribe right now. It helps me and it helps the community. So without waiting any more, let's get into the charts and look at what moving averages really are. So what is a moving average? Simply put, it is an indicator that you can place on your chart to help you identify and understand trend, and it's commonly used with technical analysis. The reason for calculating the moving average of a stock is to help smooth out price action. So instead of having to look at all the up, down, close candles on a lower time frame, a moving average simply smooths this price action out and helps you identify trend. There are two specific types of moving average. A simple moving average, which calculates an average of price over a specific time. So if you are looking at a 21 SMA, which is a simple moving average, it will calculate price over the last 21 candles. However, if you were to use an EMA or an exponential moving average, and you are again using a 21 EMA this time, it would calculate price over the last 21 candles, but it would be more weighted to the more recent candles, which means it moves quicker than an SMA. And that's the key difference here between SMAs and EMAs. So how to use an SMA or an EMA on your chart? Again, as always, I am using TradingView. So you want to come over to the indicators section and simply type in moving average, and here you will see exponential moving average and simple moving average. Today we are going to focus on exponential moving averages because they are what I like to use for intraday scalping and trends in my charts. So go ahead here, we can click on this EMA, and then I'm going to just quickly change this. So I'm on a 2-minute chart, which is what I like to execute on, and we're going to change this to a 21 EMA. I'm just going to make this a little bit thicker and easier to see. So very clear straight away that the 21 EMA smooths out price action. So today we had a nice smooth uptrend over the 21 EMA. You'll notice when price came under the 21 EMA, that signified the start of a downtrend. We then started to move down before coming back and testing the 21 EMA all over again before making a new leg down, finding a bottom, coming back up now over the 21 EMA, and we are starting to move back in an intraday uptrend holding the 21 EMA. So two key things here. First of all, this 21 EMA is showing you the short-term trend. We have a very clear uptrend here. If I was to do a trend line, it would look something like this. When we broke the trend line is the same time we broke the 21 EMA, which signifies the start of the downtrend. So we can see a downtrend just like this. Here's your downtrend, and here is price under the 21 EMA. So it smooths price out for us to clearly identify trend. And then the final trend here, we have a new uptrend above the 21 EMA. So yet again, we can do a trend line here to signify this, which would look something like this. Okay, so nice and easy then. The first thing to see is it helps us understand trend. You will also notice when the moving average is flat like this, we are in a range. This is sideways price action, accumulation, distribution, or chop. So you will know in a market, we only do one of three things. We are either in a nice uptrend, which would look something like this, or we are in sideways price action, or we are in a downtrend. Okay, so if we had price like this, I'm going to make this white. An EMA on this time frame would look something like this. Okay. All right, so we can imagine that this is price in the white line and the EMA would be the red line. Okay, so that gives you an idea of how you can use the EMA to understand trend. But more than that, it can be used as dynamic support and resistance. Just like here, we have this pullback which comes right into this 21 EMA, and again here, using it as dynamic support before we fail underneath it, come back and test this same level for a failed follow-through setup and a continuation short. Now, if you want to learn more about this specific setup, how to trade pullbacks, I'm going to post the link right up here for a free video and masterclass you can watch right now. So to prove that this is exactly how it works, let's go back to today's price action and you will see exactly that. We are in this sideways channel before we have an explosive move up. After this explosive move up, we pull back to the 21 EMA. This is your dip buy opportunity before a push up and extension. It pulls back to the 21 EMA again, dynamic support. We then turn this dynamic support into resistance for the flush down. We come back and test the 21 EMA, another flush down. We come back and test the same level again, another flush down before bottoming out, hitting a bottom of the market and using this old dynamic resistance as now support. Now, it's really important to note the exponential moving averages should not be used solely on their own as triggers. You need to use them while understanding market dynamics and basic understanding of support and resistance and market structure. What do I mean by that? If you are able to understand that this was your first leg pullback and this was a potential flag and accumulation, then you were able to get long right in here. If you understood that this was a 3 drive higher pattern and that we then had distribution up here, you understood that this was supply. So this breakdown right here was a very clean entry of confluence. You had supply at the top. We also had a 1 hour supply block up here from looking left. If I come across here, you will see this is all supply up here. So we're coming back to retest a level. Very, very clear. So you had H1 supply, you had lower time frame supply, you had a trend line break, you had a bear flag break, and you had a 21 EMA break. That is what I call confluence in the market. Then you had a new leg form. So yet again, we came to test this 21 EMA. We created another bear flag. This is redistribution for a new leg down. So we have your first leg, pullback, second leg, and then we hit this old demand block right here, which had been here for a couple of days. We tagged it, we ripped up off it, and then we started a new uptrend, breaking this old downtrend. There is your confluence to start looking long. We create another flag in here and we break out above it, and there is your long and pullback and hold. And now price is going to try and go all the way back to the top. So you can see, if you understand the use of EMAs, you can start to use them for confluence to help you get in and out of trades. You can also use them for trailing stops. So once you're in a trade, let's say you triggered your long here, you can trail your stop just under this 21 EMA, giving you nice profit targets to the upside. So now you have an overview of how exponential moving averages work and how you can use them for confluence. What I want to now dive into is how I use them on my setups and I teach my students. And I use 4 moving averages with a very simple crossover pattern to get us in and out of trades with confluence. So let's get into that right now. If you are a member of the Flow Zone community, if you are in the room or doing the course, you get this Flow Zone indicator for free. It plots my 3 favorite moving averages, which I use to identify trend and reversals. And more than that, it gives you the initial balance levels, which is a key indicator we use in the room. But if you're not in the room, I'm going to teach you right now how you can do something very, very close to this. So the first thing you want to do is come up to the indicator tab yet again. And this time you are going to search Best Cloud All MA. And I want you to put that on your chart twice. So on the first one, when it comes into your chart, you can take off the lines. You do not need the lines. Leave the trend state color bar and the shapes and the background to the colors which you like. But the key thing you need to do, I would like you to input this as a 13 and a 21 EMA. And then on the second moving average, if you open that up as well, we're going to do exactly the same, except this time we're going to do a 34 and a 50 EMA. Now, what you will want to do in this is change the plot background. So again, I take off the lines because I don't like these lines on my chart. It looks a little bit messy. Just plot the background on here. The other thing you might want to do on this is take away this shape. Now, I'm going to leave it on the fast EMA, the 13 and 21, just to show you the power of it. I don't use these as triggers, but if it helps you understand, we're going to leave that on. So the key principles of this, the 13, the 21, the 34, and the 50. Where do I get these numbers from, I hear you say? These are very simply Fibonacci sequence numbers, which means I have rolling Fibonacci's on my chart, and price loves to come and test Fibonacci sequence numbers, which means I have good levels of dynamic support and resistance. So I like to execute on a 2-minute chart. I also use a 10-minute chart with these on for reference, just to understand where medium time frame price is going, and I'm always looking at higher time frame charts. That includes the hourly, the 4-hour, the daily, and the weekly. But let's just focus on the 2-minute chart, because you can use this as a very simple scalping method. So clearly, my 13 and 21 cloud is this green cloud, and my 34 and 50 cloud is this blue cloud. And the key thing we're thinking about here is crossovers. So what is a crossover? If we think of this as our fast EMA, this is the 13 EMA, and I'm going to draw another line, and this is going to be our 21 EMA. At this point, right in here, we have a moment where the faster EMA, the 13 EMA, crosses beneath the 21 EMA. And what would that look like in terms of price action? What that would look like is probably something like this. Okay, it signifies the first time where price is trying to go lower. So you are looking for confluence in this trade to time a pullback into this area or around this area. Now, again, you need to use confluence. So I would be looking for something like a very clear imbalance here, or a supply block, or a fib for a pullback leg into 50% or the golden zone to start looking for a short rotation. Again, if you want to understand this, you can watch my pullback masterclass on this exact setup. I also gave you two other exponential moving averages. Now they are slightly slower. So you have a 13 and 21 here, and then a 34. And we're going to do these as a different color. We'll do these light blue, and a 50. Okay, and the same principles apply. These are slower exponential moving averages than the red lines, okay? So they are going to move and cross slower. What you are ideally looking for, not only the 13 to cross below the 21, but this whole wave to cross below the 34 and 50, because then what it's offering you is better confluence to get short on pullbacks into this range. So let's have a look at simple examples which set up today. Okay, so we had sideways price action. Now, these arrows that are on this chart come with this best MA. You can click them on and off, but I've left them on just for the 13 and 21. So they are simply going to appear on the chart when the 13 EMA crosses above the 21, or the red ones will appear when the 13 EMA crosses below the 21 exponential moving average. So we had this sideways price action, which we talked about. No interest in taking a position here, but we had a very nice breakout here. Now, if you understood, this was also a higher time frame demand block down here. Once the exponential moving average is crossed, this was a good long trigger. We had this brilliant move back and a pullback into the fast EMA cloud, the 1321, which held before grinding higher and putting in a flat top and creating some supply. If we zoom in a little bit here, you will see that the 13 EMA went from green to red. This is your first moment where it is signifying price might want to go lower. Now, you do not have to take this breakout here. I'm not suggesting that you instantly take that. Again, we are looking for confluence. So today we had a very nice break of an uptrend, a flat top, and a high time frame level of supply. If you miss this though, it's simple, isn't it? You just wait for the pullback. That's the better move, and the pullback came. We're simply repricing this imbalance right in here. And when we pull back, and now we get the 34 and 50 EMA flip as well, it offers a great short opportunity. So again, creation of bear flag into an imbalance. Both EMAs have flipped, suggesting price wants to run lower. So you take the short in here, you risk the recent swing high, and you can attack the demand block down below. That gave you a 6.25 risk reward. Very, very clean entry with very limited risk on the table. After that, you hit your profit target and you take it off. You're then looking for a rebalance. It comes back up, but we flip this imbalance here. Okay, so this now becomes potential demand. We're looking for price to hold this if we're thinking about getting long. Why would we be thinking about getting long? Like I said, we're thinking about confluence right here. Very clear. Liquidity. We're going to try and use this liquidity. And yes, this is an inverse head and shoulder to retest the top level of supply, which is pretty much now done. It's come and repriced this whole area. If it wants to grind higher, it can, but the best trade there has gone. So once we have that, we are again looking at longs, which means we are waiting for the EMAs to flip. And right here, you get it. The 13 flips the 21, moving from red to green. And then we get the 35 and 50 flip. So again, if you missed this trade here, which was a very simple flag or an inverse fair value gap for this continuation, you can wait for the pullback. And where do we pull back into? We create yet again a pullback into the 1321, another one into the 1321, another one into the 1321. This is giving you so many scalping opportunities, taking profit every time we break structure at the top. Very, very limited risk and great reward until eventually we have come and repriced this whole section here, and it's given you great profits. Now, this isn't the only example. I can go back and you will see the same setups happening over and over again, even overnight here. We got a nice cross. You have very, very limited risk on this trade. If you want to look for a short on the retest into here, you can risk the old swing high. And you can look for this liquidity underneath this level right here. Okay, and again, look at that risk reward. Absolutely phenomenal. 6.2, very, very limited risk, simply following momentum. So we are using these as dynamic support and resistance to follow momentum. The same thing happened yesterday. We put in this bottom, we flipped the EMAs, and you can see yet again a beautiful uptrend, constantly creating flags, pulling back into these EMA structures. This is exactly how I teach my students to use these EMAs. They are used as confluence to get in and out of trades. The great thing with these, and lots of people will say, oh, they're a lagging indicator. Indeed, they are a lagging indicator. But what I love about that is they will stop you guessing tops and bottoms. If you follow the color coding system and you simply say you will not short price action when it is blue and green, and you will not long price action when it is red, then you are going to follow momentum, because what that means, because it's lagging, you will not be looking for dip buys here. Instead, you will be taking the pullback trade, which is a much, much safer trade to take. And the same can be said for the tops. No guessing the top of this range. We wait for failure, we wait for the EMAs to flip, and we take the first or second pullback. So if you missed this pullback, it gave you another opportunity. In fact, it gave you plenty of opportunities to ride it the whole way down. And you will see this system works over and over and over again. And another great thing about this system is trading range can be very difficult. Now, I do teach trading range as a very specific setup in my course, but I do not advise it for beginners. It can be tricky to understand because you have to trade the edges. And what this system does is, by showing you it's green and red and green and red and going sideways, it is identifying a very choppy range. And for most traders, that's a really good signal to just leave the market alone. It's much easier to trade momentum when there is a clear trend than when the market is building liquidity, preparing to do a new trend via distribution or accumulation, which is exactly what range is. Now, I said to you that it can also help with multi-time frame thesis, because some people really struggle to understand when a medium time frame like a M15 or an hourly is in a bull trend, or are we actually in a bear trend, and the lower time frame is not lining up, and they get confused and they don't know what to do. Having these EMA'S can really help. Now, as you can see here, my bottom time frame is a 10-minute and the top is a 2-minute. Now, this is great for traders who love to scalp. Okay, you can look at the 10-minute for reference, and we had the EMA crossover, which is the same crossover that we had on the 2 minutes. That's signifying an uptrend on both these parts. The pullback, you will note, came and held the 13 and 21, and we had the lower time frame cross before digging deeper. So if you missed this short, you could have simply waited to see what price did as these remained bullish. And when we regained control of the 10-minute exponential moving averages and we flipped the 2-minute moving averages, we knew the bulls were back in control, and you could start looking for what I call pro trend longs, which are simply multi-time frame levels lining up. So there's a pro tip for you, how to use it on various charts. Now, of course, you don't have to use the 2 and the 10. This is just what I like to use when I'm trading futures, with one eye on the hourly, the 4-hour, the daily, and the weekly. Hopefully this video helps you start nailing in those profits starting today. If you have enjoyed this video, and if you want to learn how to trade with confidence, how to trade my setups, and how to understand multi-time frame analysis, smart money concepts, Malaysian SNR, and so much more, you can do my course, the Flow Zone Trader course, right now. You can use code YouTube to get you 20% off. Just visit flowzonetrader.com. I hope to see you in the room real soon. Until next time, drop me a like, use hard stops, trade safe.